Hello everyone, welcome back. In the previous video, we went through the crypto market outlook for 2023 report from the Coinbase. We had a look briefly in a short video, like a 10 minutes video, in contrast to this long video, which we are going to read this report together and to see what author means by his explanation and his report and what is the crypto market in 2023 with the glasses of the Coinbase. Mostly in this report, the author is explaining about the outlook of the crypto in 2023 and what has we passed, let's say, in the 2022 bear market. If you have a look on the Bitcoin, we can see in the let's go in this clear chart. In the entire of the 2022, just market was going down except a couple of bear relief rally and or dead cat bounce, whatever you want to call it. But the entire market was going down in this year, which is going to be finished within 2 days. This report explained about the outlook, and then the main things the author is willing to explain, or the author is expecting to see, is about the Bitcoin, Ethereum, and regulation. The key takeaways here is we expect digital asset selection will transition towards higher quality names like Bitcoin and Ethereum based on factors like sustainable tokenomics, the maturity of the respective ecosystem, and relative market liquidity. Here, the author does not name, or even below does not name any specific project, but with some hints, he says which projects he's going to explain. And then he explained about we think investors' willingness to accumulate altcoin has been severely impacted by the deleveraging in 2022 and may take many months to fully recapture it. And this is what he's expecting, and which is good from the deleveraging of the market. And we all observed during the last year, 2022, the crash of the Luna, which starts this cascade and domino effect or ripple effect, or whatever you want to call it. And then we went to the Celsius, and after that one, Voyager, then many things. And like in November, we saw the FTX collapse, Alameda Research, and much more AAX exchange collapse. And now Bitcoin itself and the crypto in general, it is more free, it is more deleveraged and can survive and this bear market, and can have we can expect to see a next bull run after this deleveraging. Then he says we believe the next market cycle in digital assets will be shaped in the significant part by the development of standards and frameworks for regulated entities. Then the last thing he is planning to say during his report is about the regulation, about the regulatories, about the institutional investment, which they can see a safe haven and safe opportunity exists, then they will planning to invest. And this investment will be big, and we are expecting to see a really rise of this crypto economy. Okay, these are the main things we are going to investigate during this report and during this video, which as here is written, it's like 70 minutes, and this report is for December 2022, and then it is with David Dong, CFA, head institutional research of the Coinbase. I had a look on his profile on the LinkedIn. It seems he's a big name, by the way. It has like a 5K followers on his LinkedIn, and now he's working for a year and 2 months with Coinbase, which is not that long in the crypto industry. Of course, he comes with a background of finance and the research and these things. He's graduated from in computer science, in the political science, and then the master degree from the London School of Economy and Political Science. He has this background. He works for big names. Okay, we can see Deutsche Bank. We can see here as a vice president senior LatAm rate strategist at Santander, and then the biggest name here is the HSBC. global banking. He knows what institutional investors are looking for. Therefore, we can consider if we are looking for the institutional investor, big players like BlackRock, like these big names, at least he's as an interdisciplinary guy. He knows what these people they want. Okay, therefore we can rely on his report. Let's have a look on his report and let's see what he's expecting. He started his report mainly with the comparison between the let's call it the traditional finance, let's call it the stock market, with crypto market, the new economy, which we are willing to learn and to earn more on that. He says, for one, institutional crypto adoption remains firmly interchained. Many investors take a long-term perspective and recognize the cyclical nature of these markets. Okay, he's okay, these people, they know what they want and they are in these things. Then he compare the total market capitalization of the cryptocurrencies is currently around $835 billion US dollar, and it is down 62% from 2.2 trillion by the end of 2021. And he compares with the Nasdaq, which is like 30% since the end of 2021, and with S&P 500 down 18%. If we have a look on the market, on the stock market, we can compare with the China. China went down like a 50 top Chinese company. It went almost 46% down from its ATH on February 2021. Then we can check it with the Hong Kong. It was down like a 56%, and today price is like 41% down. With the top 50 European companies, it went to the 26% down, and with respect to the current index rate is 13% down, which is one of the best in the world. We can see for the China, Hong Kong, Europe, and the US. Then if you compare it with the top 30, which is the Dow Jones, we can see 22%, and with the respect of the current is like a 10%, which is very close to the top 50 European companies. The US 100 companies, we can see it went all the way down more than 37%, and for the today is 35, almost 35, more than 35% correction, which is officially we are in the bear market. When we are more than 20% down from its ATH, it's officially bear, and now we can see we are in the bear market. But if you have a look on the S&P 500, we can see it went to the 27%, more than 27% down, and today it's almost 21%. If we compare it with the Bitcoin, it went 77% down, and today is 75% down. Then we checked this data with the author of this article, which is correct. The data is correct. Then he compares from the Sharpe ratio perspective, and he compares it with the Sharpe ratio. If you're interested to know the formula, you can find this formula here for the Sharpe ratio formula. And but here also he says, prior to the fail-out in November, an equality weight basket of the Bitcoin and Ethereum offered a negative Sharpe ratio of the 1.08 compared to an average negative return of 0.9 for US stock markets. We can, okay, of course it is different, but it is very good when we compare with the basket of Bitcoin and Ethereum. You can see Bitcoin has today, let's check, 42% of the market cap. It has 42% dominance, and the Ethereum has almost 20% of the market. Then this basket, like 60% of these, let's have a look on the total. Yes, $751 billion. Okay, it is really good when we want to compare it with the other traditional risk assets in 2029. Then he compares it with this basket with the gold, Nasdaq, S&P, and the US bond. Then he says, for instance, for this difference, we expect greater calls for regulatory clarity to emerge as institutional investors push to better governance and standards to help make the asset class more accessible, safer, and easier for all to navigate. This will take time, however, it is possible. Okay, he's expecting to see, it takes time, but he's expecting to see this regulatory will take place. Then he said, evaluation of the crypto economy is putting subject like tokenization, permissioned DeFi, Web3 front and center. These are the main things we were going to investigate during his report. Meanwhile, Bitcoin's core investment thesis remains intact, and Ethereum seems to be outpacing its layer 1 competition in terms of the network activity, which is true. If we have a look on the here, let me check on the chains, we can see the number of the protocols and different DeFi application developed in these lists, which is like 160. We can see the top one here is the protocol is Ethereum with more than 620 application. Yeah, and then after that one is the Binance Smart Chain, then the Polygon, which in his report he also is talking about these things. And then meanwhile, okay, layer 1 and competitor in terms of the network activity. Okay, this is the network activity which we are expecting and which we can see here on this blockchain. We are seeing a greater variety of use case for non-fungible token outside of the art, like using NFTs to certify and authenticate real-world assets, or as ENS domain. This is the next thing the author wants to point and wants to consider, these NFTs and non-fungible token, because we just saw during the 2022, most of the talks was regarding the NFTs as an art, as a collectible. But he's expecting to see more real use case, which we can solve the existing issue in the world with these NFTs. And we can see this one like ENS domain name, which then the next one is like a real world asset and tokenization. Then talks about stable coins, which is one of the largest sector in the crypto ecosystem. If I can find here my formula for the stable, this one. For instance, if we consider the dominance of the Bitcoin except stable coin, we can see the dominance of the Bitcoin here. I calculated like this: USDT plus USDC plus DAI plus market cap of the BUSD. Then I just subtract them from the total and then divide them by 100. And now I have like a 50.81%, which is different from the dominance of this pure dominance of the Bitcoin, which is calculated by the trading view. And we can see they have like a big portion of this market, more than we have the USD here. We have the USDT plus USD plus this one. We can see it has more than 14%. Okay, just we should add the DAI and then let's say the other BUSD. This is a big sector as well. And in continue, he says, we discussed these trends and many more in the enclosed report, starting with the key terms as we expect in 2023. Okay, we already discussed about the author, and then the key terms for 2023. The constant stop and start pattern of the financial market in recent months has made it difficult for allocators to deploy capital in a meaningful way for most asset classes. He wants mainly to say it is not only Bitcoin, which we can see is going down and it does not attract the other investor. As we already checked and we saw in the other markets, the traditional market also, the investors are not willing to invest. And we say the cash is king. Cash is king. It means people are not willing to invest and they prefer to be in the cash position. But for crypto in particular, the insolvencies and deleveraging events of 2022 have mainly affect this investment. Okay, we saw FTX, Luna crash, Celsius, Voyager, 3 Arrow Capitals, this insolvency, and then they deleverage the market. And these are the things now people, they are doubting, should we invest in the market or not? Then said, we believe could extend the down cycle for at least several more months. This report is for 20th December, several more months. We can say, okay, for the Q1 2023, he's expecting. And then, okay, he explained about the FTX bankruptcy and the lack of liquidity because many people, they lost their money in the FTX. And then he said, okay, these are not only bad news, there are a couple of good news, and new innovation in the asset class can really, again, attract new people, attract new investor to work and invest in this asset class. Then he said, against this backdrop, we expect three key themes to prevail in 2023. A flight to quality among institutional investors, creative destruction that will eventually lead to new opportunities, which people, they are waiting again to be greedy for these new opportunities, and then foundational reforms that you share in the next cycle. And in this chart, mainly he compared the correlation matrix for 1 year window with between these assets, Bitcoin, Ethereum, copper, and gold, DXY. And we can see the biggest correlation among the others with the Bitcoin, it goes with S&P 500, 0.58%. It means those people, they are investing on S&P 500. They are mostly and most luckily, they are investing here. And this is the correlation. Those people, they are in gold, they are not that much interested here, but here we can see over there the people. Because over there in the S&P 500, we can see some similarities in terms of the big tech giants like Microsoft, Apple. In the end, the Bitcoin and crypto is a software. And those people, they have their knowledge over there, like myself. We can move it in this area, and we can use that knowledge again here. We do not need to rebuild everything from scratch. Then he explained about the flight to quality. The digital asset selection for favor higher quality token. This is one of the things mostly he explained during this report for the institutional investor. They are looking for like a real use case. They are looking for the real validity of this project. And he's expecting the recession timing span from the early second quarter of 2023 to the as late as first quarter of the 2024. He's expecting in that time, expected recession could happen. Within crypto, we expect the digital asset selection will transition towards a higher quality name like Bitcoin and Ethereum based on factors like sustainable tokenomics, the maturity of the respective ecosystem, and the relative market liquidity. These are the mainly things. If you want to invest and you want to find a good project, you can start to find which project they are matched in this frame. Then you can go for those projects. Then he said we assign a low probability that crypto performance will decouple from the traditional risk asset in the first month of 2023. Then in the Q1, he's expecting these will be decoupled, and people are willing to invest more on crypto. This is the other point we should consider. Then he considered for the long-term holders of the BTC at 85%. It means long-term holders still with this downtrend are willing to have their Bitcoin. With the recent proliferation of alternative layer 1 blockchain, the marketplace for layer 1 has become saturated. We saw many projects like they call themselves as Ethereum killer. We saw Cardano, Algorand, let's say Binance Smart Chain, Tron Network, EOS, Solana. Recently we saw Aptos and this new project, Near Protocol, and many of them. And really, market is saturated here. We do not need that much new layer 1. Based off these new layer 1 and new layer 2, we can have our own desire. And then he says Ethereum's successful merge, which he's expecting Ethereum's successful merge, but I'm not 100% sure with the author, because Ethereum was from the second largest decentralized network to become like a even it's not decentralized anymore. It is under the control of these giant Ethereum validator. It is decentralized in somehow, but still it is under the censorship and the enforcement of OFAC. And we can see during the last 30 days, more than 69% of the validator, they are censoring the Ethereum transaction. For me, Ethereum was not that much successful, but still Ethereum is too big to fail. Okay, then it says, this support the fundamental narrative for Ethereum as a leader in the multi-chain world. Yeah, in somehow, I should say here, I agree with him. Then, particularly since nearly all networks are competing for the same pool of the user and capital, which here on DeFi Llama, we can see Ethereum has more than 59% of this liquidity on the top of itself. And then he talks about the layer 2 scaling. Layer 2 scaling, we saw the big names again here, like Polygon Matic is here, Optimism is here, Arbitrum is here in the layer 2 solution, and like small one like we can see Shiba also is planning to have this solution. The Immutable X among the small cap, they have these things on gaming and this plan on horizon, we can see. Then this includes centralizations. Okay, the growth of decentralization future. Decentralization future, he explained about the DeFi and what we saw during this 2022 bear market with the centralized finance, like a CeFi, which is here, he explained like a Celsius, 3 Arrow Capitals, and FTX, with the CDFi, he calls it. We saw it failed, and they collapsed the market with themselves. And he also compared the monthly volume across all DEXs from the 2021 up to date. And we see, okay, in the bull market, it went really high, more than $200 billion. And now it's getting close to the bottom, or we can say in November, it somehow recovered part of the time from June, July, August. Then more interest in the permission DeFi. He explained about the permission and permissionless decentralized DeFi or decentralized finance, which we can see in the Aave. I just select here. Aave also has this product, which call it as an Aave Arch or Aave Arc, whatever you want to call it. It has it doesn't have that much value. It has only 58,000, but which is in compared to the Aave 4, which is 28 million. Aave 3 is 448 million, and Aave 2 has 3 billion, which is really big in compared to this permissioned DeFi. But he explained we need this permission DeFi because if we need big money comes from the institutional investor, we should provide them some level of certainties, and they want to be away with the AML KYC to have more trust, to invest, to then they can provide this kind of product for their clients. These are the things maybe here he explained. I cannot agree with these things, and partially it is true, but not 100%. However, over time, we believe that user and regulators may find a way to consolidate these via Web3 primitives like decentralized identity to enable the best of both worlds. This is one of the things many people, they don't like the centralized exchanges like Binance, like a KuCoin and a Coinbase, which provides this report, because of, again, they are controlling people, they are controlling these users. But with the other solution, which we can see with the Web3, most possibly we can see a better narrative. Then he talks about the tokenization and versus token. And he explained about the tokenization, how we can tokenize everything from the tokenizing real world asset as a next trend for 2023, which is really valid. And I think this tokenization, in addition to the institutional investors, it brings the power to microeconomy to grow the macroeconomy. You have, for instance, like a $10, you are not able to buy a house, but you are able to buy like a $10 dollars worth of that house, and if that house has any revenue, you can have that amount of revenue from that house, which is this one will help, and it's really one of the future of the crypto and one of the future of the macro economy, which will open economy for everyone across the world. Then he explained about the big for the giant companies which they are willing to invest, like he is exampling here from the let's say the borrowed up to $30 million for this company, and then the JP Morgan, DBS Bank, and the other institution, they are currently working on from the Polygon. We saw JP Morgan tries to kill crypto, but in reality we see they are developing on Polygon, they are developing on different projects. That's why this layer 2 it has really good potential during the next bull market. In the areas for creative destruction, he explained about the things which can attract people about a new project in the next year, and it is true many assets are locked in the FTX, and just today, last night, we saw they are moving their assets from the Alameda Research crypto wallet. That's why Solana dumped quite hard for the last night. Those projects must now wait until bankruptcy proceedings are finalizing in order to recover their assets, meaning they may be unable to access a big part of their treasury's native token for several years. We saw there are big part of Bitcoin, it's in the wallet of the Madox exchange, and still they are over there and they are locked, and people, they couldn't find a solution to get their assets back. Then in the section 6, he explained about the sector flow on the platform. He's talking here about the different opportunities and the trend in 2023. And the biggest one is going for the liquid staking. If you are familiar with the liquid staking, it is like when you want to, for instance, stake your Ethereum, you can go and stake your Ethereum. And what it will happen, you locked your liquidity. The network does not have this liquidity, but the solution is you can lock your Ethereum. Then these protocols like Lido Finance or the other protocols, they will give you like a receipt of your token deposited in their validators or in their platform. Then with that token, you can go and you can have yield farming or the other things, because that one is representing as your Ethereum. This is also the next trend in 2023, which you can see it has more than 80%. Then we can see about the file storage solution like Arviv, like a Filecoin, and the gaming and the different things here he explained in detail from the smart contract platforms, currencies, scaling, stable coins. These are the things mostly he is expecting to see during the next year for this novelty. He's talking also about the Bitcoin miners and the Bitcoin capitulation, which it was just 2 weeks ago we saw for the Core Scientific farm, which he also, this company also, this guy also applied for Chapter 11, and we saw these miners also, they are under the pressure, and as based off the report from the Glassnode, he says on November 18th, 2022, it suggests Bitcoin miners are selling almost 135% of coins mined per day. It means there are big sell pressure in the market currently, we can see, meaning miners are liquidating the entirety of their newly mined coin, as well as portions of their BTC reserve. Whatever they mine, in addition, whatever they have, they are willing to sell, because they want to compensate this higher input cost and the lower output value of the market, with combined with the elevated energy prices. And these are the things markets mainly are suffering at the moment. And then he's expecting this thing. For that reason, we would expect the Bitcoin mining industry to consolidate even further in 2023. And also he is reporting for the Bitcoin mean hash rate with the 30 days moving average. And he's in the next section, he's talking about the exploring a new use case for NFTs. Mostly he's talking about the NFT as a collectible, which we saw during the 2022. The use case, the main use case of the NFT was collectible and these digital arts, and people just think about the JPEG for million worth of dollar, and then it says, okay, these are just collectible, these are not like a real use case. And now he says, in this 2023, the coming year, we can see the new use case, and these could be new forms of the utility outside of the art, could be digital identity, ticketing, memberships, subscriptions, the tokenization of the real world assets, and supply chain logistics. It was just 2-3 days ago we saw VeChain also is planning to have these NFTs and this tokenization of the art, and the expertise of the VeChain, as you know, it's for supply chain, for logistic, and this is a good thing we can see here also in this report. Then he's talking about the foundational reforms to spur optimism, and he says we believe the next market cycle in digital assets will be shaped in a significantly part by development of standardized and framework for the regulated entities. It is true, if we want to see the trust come back, then big players should come back to the market, and they need some level of certainties. Then they need this standardization and regulation. And he also is referring to one of his papers, and the clear guide is necessary to avoid driving innovation to a region where regulatory requirements are weaker and customers may be at a greater risk. In the US, we expect that the new Congress to continue working on one or more of the current legalization proposal that had drawn to support this one. And he's talking about regulatory, and these are the things he's expecting for 2023. Then he says, that said, we believe that policymakers should recognize the problem faced this year were driven by human beings, not any unique aspect of crypto or blockchain technology. We saw during the crash of the FTX, many senators in the US, they said, okay, the technology collapsed and it's misused, and the Bitcoin itself is not good. But as directly and very clear, it's written in this report, it is the lack of regulation. It is the lack of, let's say, these policymakers. And it is not the issue or the problem of the crypto and the blockchain technology. Then he's talking about the reform of crypto lending practice, and then he said, more than luckily, we will see a maturation of lending practices in the crypto space, including underwriting standards, appropriate collateralization, asset liability management. And then another theme for 2023 may be that the source of inventory in this space will move from historically retail-based into institutional investor. And this is really, really interesting for me when I see this one. He says, then in this year, most of the retail investors are in, but the narrative will change. The big player will come and they will act. Then this is the right time to invest on crypto if you want to be rich like a big investor. The amount of money you can invest here, it will be totally different in the amount of money you can invest in 2025. This is something different. Okay. Then we believe it could take a few months for institutional credit to recover previous level of activity, but borrowing will luckily not be challenge for credit-worthy, responsible borrowers. Okay, for normal people it could be difficult, but for these people, of course, it's not difficult. Therefore, they can invest. They can really quickly recover and invest more in this part. A path for institutional adoption. He's explaining about the path for the institutional adoption. Despite the widespread market volatility and low trading volume, we still witnesses broad institutional adoption of crypto in 2022, alongside the launch of many new partnerships. Here he's referring to the part with BlackRock, which the big investor like BlackRock is planning to have collaboration with Coinbase to invest in crypto. And then suggested that investors believe crypto is here to stay based off this one. regardless of poor price action in the short term or the unfortunate behavior of some bad actors. Okay, mainly he says big investor, they believe crypto will survive. Okay, it is just because many people they scared at the moment. It says okay, for sure crypto will stay, and this big investor will invest again, regardless of this bad price action we can see in the market. Then indeed asset managers have continued to onboard crypto. The asset managers are planning and investing more on crypto. And then before that can happen, however, we still need to see a bottoming of the crypto market, which may take time. It does not help that traditional financial market haven't found their bottom yet either. They are still repricing on a downward trajectory, which may persist through Q1 2023. On the upside, the stronger USD trend, a key constraint for holding many long duration assets, now appears more vulnerable than in early Q4 2022, even if it's not over. And then in the end, in section 8, he has this part for the likely path of the price during the next 12 months, which means by the end of December 2023. Majority of the vote for this survey was will stay range bound, more than 53% in the range bound in the next 12 months they are expecting. Then we can see more than 9% don't know, no opinion. More than 7%, almost 8%, they are really optimistic and they are saying will trend higher, and we can see the new high in 2023. Of course, this could not be only the ATH, at least they are expecting the price will bounce to 30K. And 29%, they are expecting the market will go lower. And this is the time for us to make an action. We can see like only 30% of the people, they are expecting for the price to go lower. And 53% they are in the range, and only 8% they are thinking the Bitcoin or the market or this basket of Bitcoin and Ethereum will go higher. What I personally want to do, what I personally willing to do during this situation is the dollar cost averaging in those projects which I believe they have the future. I'm not going all into one project, if it was to Bitcoin, Ethereum, Cardano, Filecoin, or whatever it is, because if I want to bet only on one horse and that horse die, what should I do? Therefore, my personal strategy will be selecting my portfolio and then DCA on those projects which I'm willing to invest on them. And I have my portfolio here. You can, I think, find it in the description of this video. These are the current allocation. Mostly I'm cash. You can see more than 70% of my position are cash. I'm not that much in position of some coins. I have the big one is Filecoin, Cardano, Mina protocol, and the other one are not that big as the other project. I hope you find this video useful and informative. If you like it, please write it down in the comment section. Then I can realize, okay, these kind of videos are useful and informative. Then I'm going to explain and to have this kind of video. Thank you so much for watching, and let's see in the other video, and let's see what will happen in 2023.